Nike is hitting a 52-week low in the after hours after reporting their Q1 numbers. And the questions on every investor's mind at this moment is, how much lower are these stocks going to go? And is this a good time to step in and buy? We'll answer both of those questions on today's show when we talk about Nike's Q1 earnings. What is going on, investors? Hopefully you guys are surviving these markets. These are fantastic times to be a long-term investor because as the panic sets in, it's going to create even better and better opportunities for you out there, the investor. Now, over the last year, Nike's down 34% year to date, down 42%. That includes a gigantic 9% drop in the after hours. I tell you what, any bit of news for stocks is just sending these things lower, and that's when you know things are getting really, really good for you as an investor. Now, here's the surprising thing about Nike's Q1. Look, they actually beat on that revenue side by about $410 million. They came in at $12.69 billion. That was 3.6% year over year growth. Expectations was closer to $12.28 billion worth of revenue, or just 0.28% growth. Now, we'll talk about the upcoming expectations as well, but we'll also go through all these earnings. We'll take a look at the gross margins, the profit, the all-important inventory numbers as well. We'll talk about all of that. We'll also talk about how the fact that this company actually beat on that EPS side as well, coming in at 93 cents per share. The expectations were for 92 cents, but what all investors are doing is they're looking out at least a quarter or two, and they're seeing with Nike in the upcoming quarter, that's the fiscal quarter Q2, they're expected to earn just 73 cents per share. That would be negative 11% growth. This quarter, negative 20% growth. One reason why this company is not making as much money as it did last year is the fact that they have a gigantic inventory build. We'll show that to you when we get over to the financials here and we look at the balance sheet. You are going to see skyrocketing inventory levels over at Nike, and I can attest this company is already discounting. I was on Nike's website a couple of days ago. I needed new shoes for my boys, and I was able to get not only 2 pairs of shoes, but several clothing items as well, all for less than $100, which quite frankly would have never happened with Nike in the past. So while this quarter, and we'll go through it here in a minute, Q1 looks pretty good, a lot of investors are starting to connect the dots and the fact that the upcoming quarter is probably going to be pretty rough from a margin and a profit perspective. What's also looking actually not rough, but spectacular is this technical chart pattern. We talked about this earlier last week when we did our sector video on apparel. We talked about how if Nike came down to about $85 per share, well, that would pull it back to a trend that is very important. We'll get to that here in a moment. But in the most recent quarter, we had that $12.69 billion worth of revenue. That was about 4% growth on that revenue side, but our gross profit actually declined. It went from about roughly $5.7 billion down to about $5.6 billion, again, primarily due to the fact that your cost of sales rose by about 8%, and probably that average selling price is starting to come under pressure. We'll see that when we get to inventories. So you had gross margins last year at 46.5%. Now you're all the way down to 44.3%. I was looking for a number closer to about 45%, and we can imagine in subsequent quarters, it's probably not going to get any better. Now, on top of that, your demand creation expense, this is marketing for Nike, that was up 3% year over year to $943 million. Your operating overhead expenses, this is all your employees, your back office, all those types of things, that was up 12% year over year to nearly $3 billion. So your total selling, general, and administrative expenses coming in at $3.9 billion. That was up 10% year over year. Last year, you were closer to $3.6 billion. Now it's 30.9% of revenue. This is in terms of our cost. Last year was just 29.2. So you guessed it. When your revenues barely move, your gross profit shrinks, and your operating expenses rise by 10%, well, you flow all the way down here to net income, and it's going to paint a really ugly story. It's down 22% year over year. Last year, we earned nearly $1.9 billion in a quarter in terms of profit. This year, closer to $1.5 billion. And another reason why that EPS might look a little bit better than it really was is the fact that they bought back plenty of shares. This is why we don't tend to pay attention to EPS on the investor channel, and most really, really good investors that I know barely pay attention to EPS at all, especially on a company executing on a buyback. Now we come down to the balance sheet, and this paints a really ugly story for Nike going forward. Now they still have plenty of cash. Okay. When I say ugly story, it's not like this is going to turn into Under Armour and they're going to be on the verge of not necessarily bankruptcy, but really, really bad times. You still have plenty of cash over at this company. I think this company would be wise to look to do some acquisitions. They've obviously acquired companies in the past. They used to own the Hurley brand. I believe they sold that off, but they acquired Converse at like one of the greatest times ever. They basically bought that company off the scrap heap. And now you're looking at a company, I think that business model, we'll see here in a moment, does north of $400 or $500 million in a year. But here is what investors are looking at. And this is what we looked at on our preview show that we did last week on the apparel sector, is every apparel maker is stacking up inventories to levels I have never seen before. Look at our inventory level over at Nike of 44%. This is a result of these companies seeing the supply chain issues a year ago with all the boats stuck in the ports and all those types of things. Well, they pre-ordered, not anticipating the economic disaster that we're in here in a country and really worldwide. And they got themselves in trouble with this inventory. Last year, you had just $6.7 billion in inventory. Now you have $9.6 billion. I tell you what, if you need sneakers for your kids or sneakers for yourself or anything Nike, you should get it at a steep discount. I think they had a coupon code on their website for an extra 20% off, and most of what I was buying was already marked down 30 or 40%. Now, I think it's going to get even better, but look, when your little kids' feet are growing, you kind of have to buy a pair of shoes. But this will ultimately be good for the end consumer and probably the quote macro environment. When you have this much inventory, you're going to have declining prices that will show up in CPI, not anytime soon, but probably by the first quarter or second quarter of next year. That data will roll through to the CPI that, all of a sudden apparel is not growing in terms of how it has in the past with respect to inflation. So you should see this actually be beneficial for the macro economy. What will be beneficial for the macro economy will have the Federal Reserve start to pump the brakes. And that is why here on the Investor Channel, we are not nearly as nervous or panicking about anything at all, because we're looking 12 months out and realizing that the Federal Reserve is going to have to not only take their foot off the gas in terms of tightening, they're probably going to have to slam it on the brakes. And that is going to create a quick reversal in equities, I believe, probably starting towards the first and second quarter of 2023. That's why we're trying to accumulate stocks in Q3 and Q4 of this year. Long-winded way of saying that Nike has way too much inventory and a heck of a lot of stuff is going to go on sale. Now, in terms of long-term debt, they've got a little bit, but that's down 5% year over year. Looking good from a balance sheet perspective outside of that inventory burn. Now, here's the other thing that is right now like a hurricane force, and our thoughts and prayers are with the people out in Florida and the East Coast. Hope everybody's safe out there. But we've got strong winds in our face when it comes to FX or currency. Obviously, most of you know that are watching this, the dollar has appreciated against almost all currencies, but particularly the euro, and I'll show you evidence of this here. But I first want to focus on North America. We had 17% growth in that footwear. That's the largest business. The North American footwear business is the largest business for Nike, and this includes other geographic regions as well. It outsells other entire regions. So look, your top performing asset at Nike is still growing 17%. That is why I'm not alarmed. That's why I haven't sold this like I've sold Meta and I've sold Nvidia over the last year or so, is the fact that those companies' core business started to slow down. When it comes to Nike, their core business, North American footwear, is still looking really good. Now, for total North America, you grew 13%. Now, you don't have an FX impact, obviously, when you're selling everything in dollars. But when you look at Europe, Middle East, and Africa, particularly Europe and the euro, you have devastating impacts of that euro declining against the dollar. And here it is. Look at the percent change. Footwear coming in at $2 billion. That was just 1% year over year growth. But look what it would have grown if you had factored in constant currency. It would have grown 18%. Apparel would have grown 15%. Equipment, 18%. Instead, the euro's devastating fall against the United States dollar has it at just 1% growth. That region would have actually grown 17% on constant currency. So this will impact Nike today if and when, I think is probably a better way to say it, when the euro or the dollar kind of switch places, well, that will ultimately be a tailwind for Nike. The other region that we monitor very heavily here on the channel is obviously China as well. A little bit less of FX impact. So total China had negative 16% growth. Last quarter, it was negative 19% growth. So I guess you could take a little bit of grain of salt that it's not falling as fast sequentially, but on a constantly current basis, you are looking at a negative 13% growth. So they've got to turn that around over at Nike at some point. APAC, similar type story as Europe. You grew 5%, but factoring in last year's currency exchange rate, you would have grown 16%. So a lot of things impacting Nike. A lot of it is macro environment related. The fact that they had to pre-order a bunch of inventory and now they're sitting on it and they're going to have to unload that. That is going to negatively impact margins. And on top of that, it's literally a double whammy. You've got that strong dollar that's just decimating the sales in the other regions that are depreciating against the United States dollar. Now, the thing I said on our show that we did, I believe it was about a week ago, we looked at the apparel sector and we talked about how this is a monthly chart. So I've got a monthly chart of Nike here. And for literally 30 years, this stock is traded in this very tight range. Every single time it's gotten to the bottom of the range, it's been a very key economic time. Back in 2009, I don't need to tell you when that was. That was the great financial crisis. Back here in kind of the early 2000s, that was obviously the dot-com bubble. And then finally you have the early 90s. Something was going on from an economic perspective there. Could also be war-related as well, as the United States was involved in some conflicts directly back then. Look at where we are at today. I'll put a line at where, if this 9% after hour fall with Nike comes, look, folks, you will be touching this line. You've only touched this line a handful of times over the last 30 years. If this isn't a time to buy Nike, well, I don't know what is. Now, if you wanted $1,000 of a Nike stock, would I buy all 1,000 tomorrow when the market opens? Absolutely not, because there is a lot of fear in this market, and there is a pretty probably decent potential that these markets continue to sell off stocks like this. And who knows how long the strong dollar will remain, and also how long these inventory challenges will remain as well. But those same questions were with us back in 2008 and 2009. Those same questions were with us back in the early 2000s and the early 1990s. Those questions will resolve themselves. I would just enter into a stock like this very gently. Me personally, Nike is already a top 5 holding for me. I'll probably tack on a couple of shares tomorrow or the next day with this one. Understanding that things will probably and likely continue to get a little bit lower, but boy, for this stock to go from 70 down into the 50s would be a pretty dramatic move, but one that probably at this point looks more likely than unlikely, and I'd probably want a little bit of ammunition left in the tank if I wanted to do that. Now, what will drive this stock into the future is somehow if it's able to reaccelerate its revenue estimates to meet what Wall Street has. Somehow, magically, in Q3 next year, Wall Street has this stock reaccelerating a 10% grower really out into 2024. On the earnings side, we're also expected to reaccelerate them sometime next year. Now, some of that makes sense. The dollar from a currency perspective probably will reverse course at some point over the next, who knows when, but we'd have to imagine probably over the next 12 months, that could probably happen. Also, Nike could move through and burn through a lot of this $9 billion worth of inventory, get a lot of sales. And because Nike's goods aren't durable, they're consumable goods. Well, by this time next year, somebody's going to need a new pair of shoes. Somebody's going to need a new t-shirt and those types of things. So this company will probably be able to move through this inventory a little bit better than other companies that have more durable goods, like furniture makers, barbecue makers, those types of companies. If they're carrying a lot of inventory right now, they're probably in a really tough spot. Whereas Nike, you're using up those t-shirts, you're using up those garments, and you tend to replace them on a pretty regular cycle. Sometime next year should be better for Nike from an earnings and a gross profit perspective. We'll see what happens. This one from a technical perspective is an absolute 3 or 4 time over the last 30 years. Okay, we're not talking about over the last 3 years. We're talking about over the last 30 years. This stock has touched this bottom channel 1, 2, 3, 4, and we're going to touch it a 5th time tomorrow, if these after-hour losses maintain themselves with Nike, if you can't step in on a stock, even just a tiny, even 1/2 of one share, if you can't step in, I guarantee you, if this stock makes a further move down, you're not going to be able to step in down there. Because if you think the news is bad tomorrow with Nike, if it drops below this technical trend line and comes down to $60, $70, $50 per share, the news about Nike is going to be a disaster. You're not going to be able to pull the trigger then. So I like this one in small quantities because we have a buyback. We have the eventual tailwind of the dollar getting weaker. We also have a growing dividend. It grew over 10% over the last year. And even with the impacts on earnings, this company can sustain its dividend. It's only paying $1.22 per share. It earned 91 cents in a really bad quarter. Earnings estimates for the upcoming quarter are 73 cents. This company could easily raise its dividend another 8, 9, 10% in the coming months and be able to easily afford that and continue to buy back the stock. That won't be the case with every stock. That's why you need to look closely at all of them during those times, but we'll certainly be here on the channel to help you through this. We're on the eve of earnings, just another 2 weeks, and we're going to have a ton of videos for you here on the channel. Hopefully you guys enjoyed this one. We'll be back in soon. Good luck with your investments.